Good morning, everyone, and thank you for joining us on our virtual retreats. As you know, every Sunday we are doing virtual retreats for you as you look forward to life after lockdown. And this weekend's virtual retreat is all about financial wellness, and I'm delighted to have joining me on this Zoom recording is Kate and Laura from Financielle and Kate from Redditch Mortgage Advice, who are going to be helping us today with some top tips and a Q&A, as well as talking about what's happening in the industry for them and what their clients and customers are talking about at the moment, to give some advice back to you as well. I'm really glad that the last couple of weeks have been really useful for you. I've had loads of emails and messages to tell me that you've been looking at your vision boards and you've been doing your 90-day plans. And I've literally just received an email actually from Annabelle. Thank you, Annabelle, just to say how much she's looking forward to Sunday mornings now, and she's really feeling like it's a really productive time of the week for her. So it's really nice to know that that's happening, and we just keep in touch with us, keep emailing, Instagram, Facebook, send in anything that you want to talk about or you want to see on the next couple of weeks. And again, these are designed to be practical and to help you really navigate this really uncertain time. And so I really hope that today you take a lot away from this, because we've looked at our goals and we've looked at what we want to achieve, but sometimes the two things that limit us from doing these things are time and money. And at the moment, we've got time on our hands. So we are now focusing on the money part of it. And I know that, I'm furloughed, as most of you know, and a lot of people are furloughed, living on 80%, or, the government schemes that have been introduced to the self-employed. And there's a lot of you out there that may be facing redundancy, have already been made redundant, or, financial risk with your future. So I thought it was a really apt time to bring up this topic and to really talk about this taboo subject, because I think a lot of women and men don't tend to talk about it. Some people feel really comfortable about talking about it, and maybe it's because they're in a really good position, so they feel completely fine to, but some of us aren't in a really great position, and that's okay too. And on one of Laura's posts this week, I actually saw about how emotional triggers from finances can really be a thing, and anxiety, depression, and just facing up to your financial situation can actually go a long way for you. And I think hopefully this workshop will give you some practical tips on how to face up to your financial wellness right now, and how to create some financial freedom and some financial security for you going forwards. So delighted to be joined by the ladies who are much more knowledgeable in this field than I am, which is why I've involved them in today's workshop. So I guess first of all, for the both of you, tell us a bit more about what you do. Laura, talk to us about Financielle. What is Financielle?
So Financielle is my little, alter ego and my hobby that I started on maternity leave, going down to next to no income on maternity leave and having to work to manage finances. It was actually something that I'd been interested in a little bit earlier, because I'd always struggle with numbers. So I started an Instagram page, because there's a personal finance community on Instagram, and kind of grew and grew in this space. I started to blog. It's my little thing outside of work that I like to write. I like to help people, and really, I guess that I found that there's a bit of a gap in knowledge for financial wellness. So there's lots of things about money saving tips and budgeting tips, and there's lots of stuff out there about how to get rich or wealthy. But what about the bit in the middle? Actually, where's the plan for normal people? And there wasn't one. And so over the past few years, I've started to build one and share it with other people, close friends, family, and they've done it, and it's kind of worked for them. So yeah, it's certainly an area of interest of mine, financial wellness especially.
Yeah, brilliant. And Kate, tell us a bit about you and your business and what you do.
So I've been a mortgage broker since I was 20 now, and I worked for 10 years after I was qualified for a big corporate business. Eventually I got into a position when I met my now husband that I could actually walk away from being employed and actually do it as an independent self-employed broker. I just worked for myself initially, and it got busier and busier. And it enabled me to actually start a brokerage and a business where I've got a couple of other advisors that work with me now, one that specialises in protection and another mortgage advisor. And then we've also got a whole support team of 3 or 4 other women, again, a girl-only team, and we support our clients from the minute that they come in to see us until they complete and when they get their keys and beyond that. So we're all about just taking it that step further, not just giving the customer a mortgage and never speaking to them again. And we build real long-term relationships with them. So yeah, that's what I'm doing at the moment.
The all-female team there, is it showing?
Yeah, that's it. I can see.
So I love that. I love the fact you've got an all-female team, and I personally know a couple of them who have helped me, and they are really, really good. And it's we were talking earlier, weren't we, about how people buy from people, and how, especially when it comes to finance or mortgages or insurance and things like that, how actually women kind of tend to feel a bit more secure maybe with other women talking about it, which is what I hope today people feel very secure with their questions that they've asked us, and with the answers, and us talking about money today, that they know that they can, ask us absolutely anything, which they have done. So financial wellness then for you girls, what does it mean to you? Laura, what does it mean to you, financial wellness?
So financial wellness for me is having a really stable platform to be able to enjoy your everyday. And so financial wellness for me is being consumer debt free, so not having any payments owed to anyone else, and only having my mortgage, and obviously in the future hoping to not have that. And it also means having a stable financial platform where you have emergency savings, so that if anything were to happen, job wise, health wise, life wise, you've got that to fall back on. And then generally having a lowish cost of living, so only spending on things that genuinely bring you joy. And I think that's the combination, that if you can get that right, you really will feel financially well.
And I think a lot of people are figuring that out, aren't they, now, about materialistic nature that we've probably been living in, buying lots of things, going out shopping, and obviously that's all been limited now, and you're having to make do with what's in your house, and people are upcycling and digging out stuff out the garage, out the loft, finding clothes that they probably haven't worn for ages, or actually maybe just leisure wear. But people are figuring out that actually, like, they're getting a lot of joy within the home and cooking in the house rather than going out and eating all the time and spending money out. Although my shopping bills are through the roof at the moment in terms of food shops, because we're being really creative in the kitchen. But yeah, it's definitely highlighting a lot of that sort of area of finance, isn't it, that people are probably figuring out. What about you, Kate? What do you think financial wellness means to you?
It was actually very, very similar to what Laura just said. So, I mean, I wrote a couple of notes before we started, and I wrote having disposable income beyond paying your mortgage and bills. So having spare income after paying out all of your outgoings, to fund your lifestyle and to be able to fund holidays and the things that you and your family enjoy, I suppose, without actually having to worry about it or get into debt by doing it. So if you've got a lifestyle that you can fund without being able to get into debt, funding that lifestyle, in my opinion, that's what financial wellness is.
Yeah, I think I agree. And we asked actually a couple of people before this about what financial wellness means to them, and a couple of people got back to us, and similar sort of thing, really, having enough to live comfortably, pay the mortgage, bills and holidays, and have fun. And that's from Jen. Not having anxiety or stress triggers relating to money, which I think is a really important one, because I know that I really look forward to payday and putting my money into different accounts and figuring it all out for the month, and that actually makes me feel very calm and like at peace with everything. I'm like, right, okay, I'm sorted for this month, everything's been paid, I get all my direct debits out on the same day, so it's bish bash bosh, done. And then I feel calm then for the rest of the month, and then whatever I choose to do. But I can imagine at this time, especially, a lot of my network are self-employed people, and I know that a lot of people at the moment are just not seeing the income until they get the government grants and things like that. So I know that there could be a few people out there with hardship. And if anybody ever wants to talk about anything, just to say that anything on this workshop today is, it's just our opinion. We're not, here to tell you anything regarding government advice about finances or grants that you can get or anything like that. But we'll point you in the right direction if we can, give you our top tips, and hopefully provide a bit of help with it. So Laura, I know that you have just launched something actually which is helping women massively with their financial wellness. Do you want to talk to us a little bit more about that?
I will. So this was a massive personal goal of mine that I actually set when I first came to your retreat in September. I was at a point where I was very happy with home life, very happy with work life, but when we did the Finding Your Passion exercise that you guided us through, it was very clear that this was very important to me. And the quick story behind it is I had, as a mother of 2 girls, this anxiety that if anything ever happened to me, what will my children do? How will they cope without me? And have I passed on, other than Ava, get off your iPad, or you should probably eat some more green vegetables? What am I really? What's my golden nugget, and what is my legacy? And because I feel I've figured out this playbook and instruction manual for how to really achieve financial wellness, I thought I'll write it and I'll give it to them. So I've written it. I'm sure they're not interested at the ages of 9 and 2. But I've now published it. So it's a great personal thing for me. We launched it last weekend. I was kind of spurred on really after the lockdown hit, because I suddenly realised that this was needed. An influx of questions from personal friends of mine who know this is what I kind of like to look at. And so I thought, if there's ever a time that it's needed, it's now. And we sold loads last weekend, and I'm so excited to see everyone on Instagram saying I'm up to this bit and I'm up to that bit, and oh my god, I've had a light bulb moment. So it's absolutely awesome. It's for sale at £50, but there is a professional retreat discount code, a 15% discount code. I think it's Pro Retreat 15, but we'll share it. There it is later. But any questions about it, please feel free to ask me. But generally, if you follow me on Instagram, and if you don't want to purchase it, you will. This is kind of what I talk about all the time. I don't really on weekends. I tend to answer direct messages on a weekend. So if people have messaged me during the week, any questions, I'll always give my view. I certainly won't give advice. Being a lawyer, I'll always cover myself. But I'm there for people, but this is my way of helping more people at once, I guess. So
yeah, can you see the screen there with the website that I'm scrolling through? So I love it, because I actually love your website as well, so that people can see it there, financielle.co.uk. You've got a great blog on there as well, which I was reading through some of the content yesterday, and I was looking through we talked about the 90-day plan that we did last week, but buying and selling property, wealth, mortgage, seeing your credit score, combining finances with your partner. There's some really, really great content on there. So if anybody is looking for something to have a read of, there might be something on there that is of interest to you today. So definitely check that out. And then the playbook's available on there as well. So you can see all the social media links are up there, so you can just click on those, find Laura and the Financielle online, and that's where you can find the playbook, and you can see all of the information that's involved in it on there, because it gives you actually a bit of a breakdown in terms of the content. And what I really enjoyed about the content of it was that you take it through, it's like a workbook, and you go through chapter by chapter, taking them through the journey. So whether that be like knowing your numbers and things like that, what do you think is the biggest takeaway for people from doing that? Like what's your favourite bit in there?
The favourite bit for me is after at the very beginning, I get people to download what money feelings they have, and it kind of is about reframing the way someone thinks and feels about money. And Kate may get this. A lot of people seem to think about money the minute they need a house, and suddenly go, okay, let me do a budget. What are my ingoings and outgoings? I don't know about you, the first time I applied for a mortgage, I was really nervous about what the mortgage advisor would think about how I spent money, because you'd see the budget and stuff. And so
sharing your bank statement is like opening up your soul, isn't it?
Oh, it is, and a lot of people hide from that. Do you agree, Kate?
Yeah, do you know what? It's when people come to see me, and I'll probably underestimate it a little bit because I do it all day, every day, and I have done for a long time. But I get people come in and they see me and they're literally like sweating. They're that nervous and anxious about talking to us about money and about mortgages, or they might be embarrassed about something, or and you know, all I ever reassure them is that the amount of people we see, we understand that no situation is exactly the same. We're not looking for a perfect client or a perfect profile. It would be really, really boring if everyone was perfect. And we all have pasts, and you know, what you do to change that in the future is what that matters. We understand that everyone's circumstances can't allow them to have perfect credit ratings or perfect bank statements, but we will try and work with them to put their mind at rest, so that there's nothing to be embarrassed about. There's no silly question, and if you ever go to a mortgage advisor or someone that's advising you on their finances and you do feel embarrassed or you do feel ashamed, then don't go and see them again, because they shouldn't make you feel like that at all. So yeah, I do get it a lot, and people are really, really anxious and nervous about talking about money and talking about their personal spending habits, and you shouldn't be.
I think that's because of the emotion, and the first exercise that kind of, once you've gone through that, what that means and what financial wellness means to you, what money means to you. My favourite bit in the book, in the playbook, is the know your numbers exercise, because it's probably the first time lots of people on a personal level think about key numbers. If you run a business, numbers are important every day. You know, the board of directors are looking at them, the senior leadership team are. If you're a listed business, the city are looking at them. And as an individual, so many of us don't manage our finances like a business, but actually there's probably just a handful of numbers that if you just looked at those and embraced those, they're very, very powerful. So that's my favourite bit.
Yeah, I like that as well. And I loved the bit where you actually calculate your net worth.
Yes.
Which is like, because you hear people all the time, right, on the news and stuff, like they've got a net worth of 50 million, a net worth of whatever. Obviously mine wasn't 50 million, but I worked it out and I was like, like I have a net worth. Like I
have one.
Which I thought was quite funny. But no, what I really enjoyed was, and maybe it's just me, but I actually enjoy knowing my numbers. I love a good spreadsheet. I do love, you know, going through the bank statement, or I'm one of these people that I'll check my bank accounts most days and I'll look through it and I'm like, what is that payment? I definitely did not spend £17.10 net. No, that, because it hasn't got like an actual description of where it's actually, you know, what shop it is. I'm like, I've been robbed. I've absolutely been robbed. Oh my God, like money fraud, £17.10, did not spend that. I'm going to get in touch with Nationwide straight away. And then I look at it and then I'm like, what was I doing on Saturday? And I'm like, it was that bottle of wine, wasn't it? Yeah. And yeah, but I feel like I'm on it all the time, because I even question myself, like, what is that all the time? And I do like to know that I'm being covered and that I can afford my holidays and things like that. So I just like that. I guess it's just peace of mind, isn't it? So I do like the knowing numbers, and I did enjoy the net worth exercise in it. So as a result of, obviously, we're in a bit of a crisis situation at the moment globally, and through no fault of people of their own, because, you know, like me, if I do get made redundant, for instance, and I am in financial hardship, like that is no fault of my own. I've managed my finances to a point that I could control, and now it's been taken out of my control. So of course I'm going to do everything I can about that. I think addressing it like on something today and actually reviewing my finances will be step one. Looking at my goals and ambitions of, okay, you know, did I want to buy the bigger house next year? Did I want to buy that camper van that I've mentioned before? You know, maybe I have to put things on a bit of a back burner, but at least I'm in control of that. And then if I have to go out and get another job or do what I need to do, then that's what you do, isn't it, to make it happen and get financial wellness, peace of mind that you can actually pay bills. But what have you seen in terms of like the recent crisis from the people that come to you? What are they saying? What are they asking? How is it affecting people that you know? Laura, start with you.
I think there's kind of two camps. So my Instagram following, quite a loyal and long-standing following, and kind of into the money education space anyway. So, people on debt-free journeys where they're working through to pay off debt or saving for a house. And so that group of people are frustrated with the pause. You may have had real momentum and it suddenly stopped. You had a goal to maybe get married this year, or buy a house, or make your first investment, start a business, or you've just started it and then suddenly this has just stopped. So I think there's a frustration of lack of progress. And I guess to those people, I just kind of help to show that all of this is a marathon anyway, and you can't control the macro, but you can control the micro. So and there's that really popular diagram of like a career or a life or whatever, and it's like a squiggle because it's not just a straight same, you have ups and downs and stuff. And so, and then the other side is people that have never needed to pay attention to this kind of thing before and gone, oh my God, what do I do? And there's that kind of, okay, breathe, calm down, these are just numbers, this is a fun exercise, you'll get into it, I promise. And kind of giving them the initial foundation steps to getting control of your finances. So those two camps certainly for me.
Yeah, I think it's definitely important. That step one though is like facing up to it, isn't it? Don't bury your head in the sand, because the longer you bury your head in the sand in this current time, you're just gonna come out and see a much bigger problem at the end of it. If you start looking at it now, reviewing your payments now, reviewing your outgoings now, and what you're actually doing now, then you're taking control earlier, and you're much more agile, you're reacting a lot quicker, and really embracing the situation, going, right, okay, we have to make some changes right now, but we're going to come back stronger, and this isn't forever, this is not a forever thing. We were talking about the other day, what happens if we have to get other jobs, if that is a quite a big possibility, and it's kind of, okay, maybe I have to get another job, but after that, it's not a forever job. It might just be a year-long thing until things bounce back, and then we go back to normal again, and we follow our careers as normal. But things do happen. Kate, what have you seen with your clients and your customers at the moment in the sort of house buying market, mortgages? I'm sure that's been massively affected.
Yeah, so it's been a really, really busy 8 weeks for us, and it's been a bit different to what we used to, because as opposed to it just being hectic, speaking to new clients, submitting mortgage applications, people buying houses, there's been a lot more that we've had to get involved with, such as like the payment holidays and trying to advise people that are going through financial hardship or have been financially affected by coronavirus. So the sort of things that my clients are asking me, and I'm sure it mirrors what everyone else is thinking, is they're very obviously house market. The questions are quite specific to the housing market that I get. So the biggest one probably is what house prices, what's going to happen with them. Well, we don't know at the moment is the honest answer, because they haven't been impacted directly yet, but the housing market has paused for 2 months, and that's why we can't really see yet what's going to happen with it. I haven't seen a big change in people's in the amounts that people are offering and at the moment. So that's just time, and time will tell. What's going to happen with interest rates, that's a big one at the moment. Affordability, customers that have gone on to furloughed income, or they've had their salaries reduced, and it might only be a short-term reduction, so will that impact them getting a mortgage? The availability of products, because the lenders have massively streamlined their product ranges, so there are cases that I can't place at the moment, whereas 8 weeks ago they would have absolutely flew through. High loan to value stuff such as 5 and 10% deposits are on hold a little bit at the moment. Valuations, so I've got a lot of applications on pause because the valuers haven't been able to go out and visit properties. That's changed a little bit this week, but clients obviously are anxious and eager to know when their application is going to get moving again. And just generally viewings and buying a house, is it a good time to invest your money in the housing market? So that's really an overview of the questions that I'm getting every single day at the moment. Every single person I speak to, that's the sort of things that they're asking me.
Yeah, it's been like, I was actually talking to a friend earlier, and she was saying she's going to a house viewing next week because her and her partner, like, their jobs are still secure. Like, she actually works in debt management, and he works somewhere else, but so they're absolutely fine. But there are 6 million people currently on furlough, or some sort of scheme or grant or whatever it might be in this country. And I think that's the latest figure, 6 million. So obviously, you know, there's potentially 6 million people that are going to be affected, and that is going to have a knock-on effect, whether that be they can't buy anymore or they can't move, they're in a chain, their finances. But I know that people, just for the purpose of this, you know, I'm on furlough and I've just actually done a remortgage, as you know, because we just had to do it. It was the time of year we had to do it. But they're still allowing, even though you're on furlough, they're still allowing a certain amount, aren't they? They're sort of classing it as various lenders are still okay with that for the time being.
Yeah, and in fact, most of the lenders are fine with it, but where a customer has been furloughed, so there are some lenders that are only accepting 80% of their basic income. There are some lenders that have stopped using bonuses over time and commission. There's other lenders that are actually, you know, really, really flexible, and if a customer's being topped up to 100%, they'll take 100% of their income still. So it's just being sensible about it. It's looking at the industry that the customer works in. It's looking at what the likelihood is that customer, if they weren't working anymore, would they be able to go and find a job on the same sort of income? If they weren't going to work on the same sort of income, or they were receiving 80% of their income, is that mortgage and that debt still affordable? So as an advisor, we just have a responsibility to be sensible about it. Someone, you know, that was earning £100,000 8 weeks ago, and they're currently receiving £30,000 on furloughed income and not being topped up to 100%, well, obviously we wouldn't expect them to be able to get the same mortgage as they could get 8 weeks ago, without knowing how and when are they going to return to the £100,000 a year. So yeah, it's just it's taking each case on a, you know, looking at it on its individual merits. It's a case-by-case thing, because every single situation is different. But every single day we are dealing with people that have been furloughed, that situations have changed, and we are still doing business, and we are still able to place cases. So still speak to us if you've got questions about it. Just call us, ask us.
Yeah, and I've got your details that I'll show at the end as well, so that people can get in touch with you. And I mean, this workshop as well is for the benefit of those that might be in they might be self-employed themselves, have a small business. You're looking at your business finances, and I definitely think the Financielle playbook that we mentioned earlier could still be relatable for that as well. So about knowing your numbers in your business, understanding your business. Obviously the government schemes that are available to businesses, you know, you have to go and check out those. We can't advise on anything like that, but there is help out there. And if anyone's struggling or worried or anything, please get in touch with me, with Laura. I'm sure she won't mind, but I will point you in the right direction, or even just be an ear to support, because we know that when you're self-employed, my partner's self-employed, and if it wasn't for the fact I've got him busy, he'll be sat at home probably worrying about, right, okay, am I going to get the grant? Am I going to get the loan? What should I do? And we've got some questions coming up which actually touch on the business loans that have been made available to small businesses, and the grants and furlough and all that side of things as well. So we are going to answer some questions shortly. What I was going to talk about as well was about we might go straight into the Q&As, I think, unless you girls have got anything else that you wanted to add in terms of what you're seeing recently and what you're experiencing. No, you're all good. So I think we've got loads of questions, so we might as well just dive straight in, because I think this will actually unravel a lot more talking topics. So one of our questions from one of our Instagrammers was top tips with sticking to my plan. I think a lot of people, they will go through that workbook, they will make their budget, they will make their plan. We've got our 90-day plan, we've done our vision boards, we've got everything. We know our heads are straight, and then we're going to go out into the big wide world, and Marks and Spencer's is going to be back open, and the food court's open, and the bars are open, and all these you know, shops and everything's back open and things to do again, and people are going to start going, oh, should we go there, should we do this, should we do that? And you're like, no, I've got a plan to stick to. I'm on a finance plan now for the next 6 months because I'm furloughed, and this is what I have. Laura, what are your top tips on how to stick to a plan and getting people to be on board with you with that plan?
So I think the first thing to think is, okay, what plan are you on? So the playbook is a very simple one, but a lot of people might just be saying, I need to reduce my outgoings to X. And so you do your exercise, and you have to know your numbers. And when we keep saying know your numbers, the numbers really for me are, you need to know your income, expected, estimated, approximate. You need to throw everything into it. So whether it's rental income, earned income from your job or your self-employed business, child benefit, child maintenance, everything in one pot. So what's income? Then you need to look at your outgoings, and you need to know what that figure is. And we'll talk a little bit at the very, very end, and there's something free that I can give you that can help you with this. And you need to look at how you can get those down. The difference between your income and your outgoings is your excess. And that's what Kate mentioned earlier when she talked about knowing that there's this extra, to do something with. That's a bit of financial wellness. So you've got your excess, and your excess really is the number that you have every month to put towards a goal. So once you've built a plan, whether it's getting through the next 6 months on this budget, or whether it's working towards a savings pot, an emergency savings pot, it might be a property savings pot. And the best way to stick to a plan is not to rely on willpower, but actually to use strategy. So for example, and you touched on it earlier, Kat, if you knew that every month you have £400 left over, on the first of that month, that £400 needs to move, needs to go, because you need to not think about it. And that's where strategy over willpower works, because you've moved that into your savings pot, or your paying off debt pot, or it might be an investment. You might say, I want to invest £400 a month. If that goes, it's gone. And you literally need to treat it as if you've paid a bill, because you have paid a bill, you've paid yourself. And then the rest of it is, an extra tip is, for the pandemic, I use cash envelopes, and a lot of people at work used to laugh at me about this. But I used to divide my bills up, draw the cash out at the beginning of the month, put the money in an envelope, and if it had run out, it's run out, and that includes a fund budget and a food budget and a fuel budget. I'm actually now using Starling as my spending account, and you can have separate spaces. You can have food, car, fuel, whatever, fun, beauty. And so if you've got it all organised and you're working to a budget, that's your strategy, and it's just routine. It becomes habit. And the extra thing I just add on is, on top of that, is making sure that you invest in your budget, in yourself, and so that you don't feel deprived. So making sure you're investing in health and fitness, or a little bit of shopping, or a bit of beauty, whatever it is that feeds you. Because if you feel like you're depriving yourself, it's a bit like a diet, you'll just fall off the wagon. So you need to build it into a strategy, not like a challenge.
No, what I liked about because I've seen what you do in action, because you'll text me, say, at the beginning of the month, and there might have been a birthday, or there might have been an event that month. We've gone to work events, we've done this, we've done that, and you'll text me going, right, so just so I know, that day or that weekend that we're doing this or that, exactly what are we doing, so I know exactly how much I'll need to spend, or if I need to borrow an outfit or something like that. And you actually plan your month in advance, and I really like that. So I love a diary, I love a planner, I love my 90-day plans, I love my calendar on my email calendar, and I love to look at my future weekends that month and go, right, okay, what am I doing this month on the weekend? So I'm seeing friends that weekend, family that weekend, we're going away that weekend, blah, blah, blah. And then, like you say, divvying up the money accordingly so that you can afford it. But yeah, no, I love that planning ahead. I love playing bank manager on the first of the month, if that's when you get paid. And like you feel a bit rich, and so you go, right, okay, bit to there, bit to there, bit to there. Then I shuffle it about maybe a little bit, and I like play bank manager for a day, and I get really excited about it. It's a bit sad. But yeah, no, I definitely am one for when you go out and they say, like my best friend, love her to pieces, will say, let's go for a wine. Before we know it, we're having a 3-course dinner, and we've had 3 bottles of wine. And it's like, this wasn't meant to be a dinner. It was meant to be just a glass of wine. And we've ended up talking ourselves into doing impulsive whole day out with drinks and food and everything. And it's those impulsive moments, isn't it, that you kind of have to restrict yourself from. But it's about planning in advance. And I think if you let people know as well what your end goal is, I like to think if you say, look, I've got a wedding to save for, or do you know what, I'm unemployed at the moment and I need to like do this, maybe come round to mine instead and I'll cook, and we'll have a glass of wine and I'll cook instead. Or let's go, like I've got dogs now, so let's go for a dog walk instead, and we'll grab a coffee rather than going out, and things like that. So for me, that's what I like to do. Kate, how do you stick to your plan every month?
I'm because of work being so hectic, I've got to say that I'm not a very good planner anymore. I used to be when I had a lot more time on my hands, but now I've got my little boy and the business. There's a lot to think about. But what I would say is, from a business point of view, I'm a really, really good planner. So literally on the first of every month, well, no, actually for me, it's at the end of the month. I get all the wages paid. We've had all of our, business income come in. Allocate all the money to wages, anything that we've got to, anything that the business has got that's got to go out, and then I transfer X amount into savings accounts. Someone gave me really, really good advice years ago when I set up the business, and I've always followed it, and it's really, really worked for me. That there's basically you should split your business income into three bits. So a third of it is like your tax and anything like that you've got to pay. So you've always got a pot to pay your tax, corporation tax, whatever it might be. I have to pay PAYE for the employees that I've got every single month. A third of it is what you spend. So, what you invest, what you spend, paying for my wages, paying my own wages and things like that, investing back into the business. And a third of it is savings. And it's really, really important. And I think, especially with what's happening at the moment and how quickly it's been put upon us, I think in the future you'll see a lot more businesses and self-employed people save for a rainy day, because that pot of savings will probably save me through what will be a more difficult time, and we will be doing less than what we're normally doing, but thankfully I've got savings to fall back on. So from a business point of view, I'm very, very organised. Personally, I'm not so organised at the moment, but hopefully, getting involved with this and seeing what you do, Kat, I would like to be a lot more organised. I agree with what you're saying, planning ahead, especially I think holidays, birthday and Christmas, and when clients come in to see me and I'm doing budget planners with them, just to see their monthly outgoing, and that this mirrors what you said, Laura. We don't want people to max themselves out to the point where they can't have lifestyles, because they will not enjoy living in that home. They'll begin to hate it, because all they're doing is working to pay for a home. So I like to put them in a position where their budget allows them still to plan ahead for Christmas, plan ahead to have a holiday a year if that's important to them, or 2 holidays a year if that's important. And then the sort of conversations that I have with my clients to know that this is going to be affordable now and in the future, but they're also going to be able to continue and maintain the lifestyle. But yeah, holidays, birthdays and Christmas, I think that's really important that you plan ahead for that, because people always want to buy, indulge in birthday presents, Christmas presents, a nice time at Christmas, and people who holiday and it's important to them, I always make sure that we budget ahead for that.
Yeah, Laura, you've got a few sinking pots, haven't you, where you actually like put money in for birthdays. You have like a birthday fund, a Christmas fund. You have loads of different funds everywhere, don't you? So that you actually have money to draw on at those times of year.
And like some of these are so small, like I'd love the idea that there's a load of big pots of gold everywhere. Oh my God, I have a little, and this Starling is great for this, but Monzo do it. I think some of the bigger banks are starting to catch on. But on the first of every month, at once, so some money goes into my emergency savings, because I'm building those back up at the moment after a big house renovation. So building those up, so a section goes there, and then my sinking fund payment is all the payments I want to make in a year for those big things that happen. They're not a surprise. Christmas happens the same time every year. You tend to have a certain number of birthdays every month. My husband and I have a geeky budget meeting, and you should have that. And actually, I'd really recommend that with a family member, a partner, older children if you've got those, or even a friend. Once a month, have a bottle of wine and plan the month ahead. But he's asked for a garden sinking fund, so he's allowed one, because I think he's so bored here, stuck, that he's allowed a garden fund. And we moved stuff around. One of my sinking funds I put £5 a month into. This is how small they are. And but the freedom when you have something that comes up like your car insurance renewal, and I don't have to pull that out of savings, because you're very protective of your savings, aren't you? And I don't have to put it on a credit card. I go get it from that sinking pot. And so at the first of every month, I transfer a lump sum into that bank, allocate it to the different areas, whether it's £5 or £50 for birthdays. And that's exactly, you know, if I was to apply for a mortgage with Kate, she would see on what's his payment on the first, you know, and I'll be like, what's all my little pots for the things that, again, give me joy, but mean I don't have to fund it out of a monthly budget, because some of these things can cost quite a bit. So yeah, sinking funds.
Yeah, and I definitely think as well, like, just to point out, you know, Mark and me are very much about like we do buy presents and stuff like that, but you know what, like, just spending time with people is okay as well. And I think, like, especially now more than anything, like, the emphasis on buying things for people and presents and stuff, like, if you've got it, you've got it. But if you haven't, like, don't feel bad that you haven't got it, and don't feel like you have to keep up with the Joneses and keep, you know, buying all these things, because if you've not got it, you've got to, you know, put you and your family first, and you've got to have that financial security first and foremost before you start buying presents and going extra with people. So the next question was about getting others to understand I'm on a budget and can't do everything. I think we've covered that there. Another question, we are remortgaging in December. Are there any clues around property prices and what this might mean for us? Would it be advisable to get a shorter term mortgage until there is economic recovery? So what do you think about that, Kate?
So if a customer spoke to me and they said that their mortgage product was due to expire in December, I would be having conversations with them very, very soon, sooner rather than later, about remortgaging, because lenders offer their mortgages that are valid for 6 months. So we can apply up to 6 months in advance for a remortgage now, and it, you know, we'll make sure that it's still valid. So really, in June time, if you're looking to remortgage in December, I would say, look, start having them conversations sooner rather than later. Even if you don't act upon it straight away, at least you've had some advice. And you know, with some of our clients, it might be better advice that hold out a few months, just take each case on a case-by-case basis. But yeah, definitely speak to an advisor about it sooner rather than later. And I think with the house prices, I think, yeah, it probably would benefit you to start looking at remortgages sooner, because there hasn't been an impact on the house prices yet. The remortgage applications that I'm submitting, a lot of lenders, when someone applies for a remortgage, it doesn't trigger the need for an internal valuation or a visual inspection. Most remortgages, it will trigger an automated valuation or a desktop valuation. And what I'm finding is, at the moment, the automated valuations that work off sort of an average of house prices in your local area or your street, they're still quite high, and I haven't had really any down valuations. So yeah, I think sooner rather than later would be my opinion. But yeah, if some, you know, in 6 months' time, people that are remortgaging, if house prices are impacted, then it is going to impact your loan to value, isn't it? It is going to impact the product that the lender potentially offers you. That's something that we just can't avoid, but it's also something that we just don't know how badly it's going to impact it at the moment. What I do is, so when I submit a mortgage application to someone, I do my own research on valuation. I ask the customer what they think their estimated valuation is, and then I use tools such as Zoopla, Mouse Price, Rightmove, just to see what else is on the market. So I use all the tools that a mortgage valuer would use to see if I think the value that we're trying to get is actually going to stack up. If the key is comparables, so if they can see other properties are sold or have sold at the price that we're trying to get yours to value at, then it should be absolutely fine. If there isn't anything to support it, that's when we might struggle. But that's where I do a bit of research, and I always tell my client, right, this is best case scenario in my opinion, and this is worst case scenario, so that you're, if I do come back to you with an interest rate which isn't as competitive as the one we'd hoped for, that you're expecting that could happen, because we're unsure of where your valuation sits at the moment. So I think a good advisor will always talk you through the worst case scenario and the best case scenario. However, interest rates are low across the board at the moment, so even if the valuations do come in a bit less, it's not having a massive impact on the monthly payment or the interest rate that we're offering.
Would you say a shorter term or a longer term for them? Do you reckon if they get a really good deal they should lock in, or what you think?
No, I think this is probably the most asked question that I get. So should I have a 2-year fixed rate or should I go for a 5-year fixed rate at the moment? And honestly, every single person is different. So it depends on how cautious you are. I've had people over the last 15 years that are really, really super cautious. The thought and the anxiety it gives them of not knowing where interest rates would be, doing it every 2 years, they wouldn't want to do that. So even if it meant them spending more money monthly and having that stability for a longer period, they would always go for a 5-year, a long-term product. And then you've got other people that have always done short-term. They like the flexibility of being able to review their circumstances every couple of years. The short-term product will always be cheaper than the long-term product. So again, there's just no right or wrong answer because everyone is different. What your thoughts on how interest rates may change in the future might be different to what my thoughts are, and that could impact what product you took. But all in all, the interest rates are really, really competitive and really low at the minute. It's a great time to remortgage. It's a great time to review your mortgage. If you sat on a variable rate, it's a good time to speak to us, and we'll just talk you through the benefits of each one. You know, the short-term fixed rate, the benefit is, yeah, it's going to be really low. It's going to be your cheapest option. However, there is the risk that in 2 years' time, I could be giving you bad news that it's gone up in price. And then flip it round, the 5-year, you could end up paying more, couldn't you? Because if interest rates don't change, but whilst interest rates are low, it's arguable, people would argue it's a good time to lock in. So it's all about a really good conversation with your advisor to talk through the good points and the bad points to every product. There is no right or wrong answer to that question.
No, that's good. And just so people know, like, you know, as I said, this is quite a taboo subject with finance and stuff like that. Me and Mark, we've just had to remortgage on this stage because our product was up and we went for a 5-year fixed. And I'm not saying that's what people should do, but we chose to do that because it was a really low interest. It seemed like a great product for us. It gave us that security because in my heart of hearts, I just thought, you know, with the recession, you know, we're bound to go into a recession now. And it's going to affect everyone and my employment status and everything else. Let's just lock in for 5 years. We're not moving anywhere in the short term. Let's just lock in and let's just ride this out for the next couple of years. Hopefully those house prices stay. If they do dip, hopefully they'll return in 5 years' time anyway. And let's lock in. We got a great rate, which was actually a lower rate than what we're paying now on a fixed. So that was good for us. And we locked in, and I'm comfortable with that, knowing as well that the fact is that is my set payment, which is that of what our actual income is like that, but actually the outgoing is that for us. So it gives us wiggle room to overpay, and then we can start chipping away at that mortgage term. Laura, I know that you love the fact that people, well, you want to pay off your mortgage early. You advise people, you know, mortgage to be your only debt. What's your view on mortgage debt and how to pay it off sooner and all that good stuff?
I think the first thing is we've all been there with the 2 and 5 year question. The first mortgage I ever took was atrocious. Didn't really know what I was doing. I went to an appointment on my own, just to the broker in the estate agency. And it was when I bought first house on my own. Horrendous interest rate. No reason for me to have locked in for that long. It was a 5-year, but I got my act together, worked with a friend who was a mortgage advisor and just helped me learn a bit more about it. And I actually even broke it. I paid the penalty fee, got out and made my money back within the first year. So it just shows you that the right advice early on is really, really important, because it's going to be the most expensive thing that you take on. It's the only debt I support. I think that, you know, it's unreasonable to expect nowadays people to buy houses in cash, but it's the only thing that generally, if you buy, it's an asset that's going up in value. Every other debt that you have, you're either funding a lifestyle or you're buying an asset that goes down in value. So, and the overpaying the mortgage thing, I think I only really support it when you're stable. And so I advise getting your financial platform ready. Have you got a good emergency fund? Have you got no debt? And if you're in that position, you know, the financial playbook is split up into 3 parts: survive, build, grow. When you're in your grow phase is kind of where you set things onto autopilot and you do your investing in your pension, you do your investing in your ISAs and investing in property if you wish to at that stage, but you overpay your mortgage then. And again, using your excess if that's the goal that you have, you point it towards it, and pick your time frame. If you want to pay off your mortgage, how quickly do you want to do it? Divide it by the number of years, and that's kind of what you have to overpay, bearing in mind that you have some penalties for overpaying, and so just weigh that up. But you don't want a mortgage forever. A mortgage is meant to have a term that finishes at some point, to the point where you own your house free and clear. It's funny, actually, my 9-year-old didn't realize we had a mortgage. She was like, so we have a debt? Like, yes, we do, and so does the rest of the country. And she didn't like that actually there's a charge on the house. It was interesting trying to explain that to her. But yeah, I think it's a great goal to want to be ultimately mortgage free, but it's certainly not. Your house isn't an investment. It doesn't pay you any money, and I think that's really important to know, and that's why overpaying is important. But actually having cash reserves and having investments that pay you money elsewhere is more important probably than overpaying your mortgage.
Yeah, so like what you touched there on your playbook, again, it takes you through those stages, doesn't it, about making sure that the right debt's paid off first and you've got everything in place before you start then overpaying on other areas. So I like that. So we've been married, another question, we've been married for 18 months and together 9 years. We still don't have a joint bank account. Does this affect our credit score, and should we get a joint bank account? Laura, what do you think?
Kate's shaking her head. You might have more view on the credit score. As far as I'm aware, it has no impact on your credit scores whatsoever. And actually, I've got an article on my blog about how your credit score isn't just connected to credit. Ironically, sometimes it's just about your financial footprint and where you live and what bills you pay on time and if you're on the electoral roll. So there's loads of really cool stuff that you can do to increase your credit score that doesn't involve credit or bank accounts. And the joining finances with your partner shouldn't be done to get ahead in that way. It should be a real conscious decision that our assets are each other's anyway because we're married. We see no complications or risk by doing this, and if it's right for you, I actually think it's a wonderful thing for a lot of couples to do. You just be aware of the risks before you go into it. But yeah, that's my view. What do you reckon, Kate?
On the credit score thing, yeah, it makes absolutely no difference to your credit score whether you have a joint bank account or not. And just mirror what Laura says. If it works for you, me and my husband have been married for nearly 6 years and been together, I think it's 8 or 9. We haven't got a joint bank account. We haven't got round to having one. It just fell that way because we both had our own houses, and when I moved in with him, the mortgage was already being paid out of his account. So we actually haven't got joint bank accounts, and it works for us. So everyone's different, and I think that's the thing with money, isn't it? That there's no one size fits all with money. We're all completely different in how we manage money and how our households work. So I don't have a joint bank account. Most people that come in to see me, and I can see, and I do think it works well, that they will have their individual accounts that they get paid their salary into, and they will set up a joint account purely for the basis that they'll pay a certain amount into it every month, and the mortgage and the bills will go out of that joint bank account. And that does work really, really well, but it doesn't improve or have a benefit on your credit score, no.
Yeah, that's what me and Mark do. Me and Mark have been together 16 years on and off, and in that time we didn't even talk about what each other earn or how much we had in the bank, savings, anything like that at all, literally until we bought this house together. So we had our own properties, and then we decided to buy this one together, and that was 2 years ago now. And then we had to go through the mortgage process with the UK, and it was literally the first time it's like, okay, I'm gonna have to show you my bank account, like my bank statement. And it was kind of like, when you see those dog memes when they look really like, oh, like one of them, it was kind of like, okay, you show yours first. And then anyway, got the bank account sent over and things like that. And like, obviously, of course, I opened his and had a little look because I was intrigued. And then it was like, right, come on, let's just set up a joint bank account. Let's just deposit a certain amount of money in per month and just get all the direct debits out of that, because I also have a little bit of anxiety and I'm a bit OCD about too many payments going in and out of like my account. So if I can just put the money in there, all the direct debits just go in and out of the house stuff and all that's away from me. And then I know whatever's left in my account is my money and I can figure that out. But I do like the independence of that. And I think that's okay. And I don't think, you know, some people want a joint bank account, fantastic, especially if your husband earns more than you, winning. But if he doesn't, you know, or, you know, whatever, I like the fact that I'm so independent that, you know, we do nice things. And, you know, if I want to go out and buy us dinner, then it's a treat on me and it's a treat on him and things like that. And we've just got a really good relationship and a good foundation that we trust each other anyway. So we'll always...
Personal finance is completely personal. Yeah. And I think it's about finding the thing that works right for you. I think the worst thing is not paying attention to any of it. You know, it's finding out what works for you and what makes the most of a situation, definitely.
And on the dog walks now, like, we're openly talking about stuff that we never would have talked about before. And it's not because we have a bad relationship. It's just something that we, like, particularly both of us are not that interested in talking about all the time. But we go out and I say to them, right, I'm going to get 80% on furlough, or I'm going to get the government 2,500 before tax. And then I'm like, right, okay, what can you get with your self-employment grant? Like, how much are we actually getting in now? And we are talking about money on a daily basis in terms of what's coming in this month. What are we spending this week? I'll go to Aldi. I'll do the Aldi big shop. He'll then moan that I've spent too much. But that's what you get when you live with a vegan and he wants every type of fruit and veg, you know.
Hey, but he gets fed. So
he gets fed 3 meals a day. He should be thankful. But anyway, next question. This is a great one. We have separate bank accounts and 7 pots of money in various accounts. I've heard Starling is good for saving. What online cards and bank accounts do you advise? Starling, Monzo, and the benefits of it. I think we've mentioned it before. I've got Starling, you've got Starling, Laura. I don't know if what you use, Kate, but I know that if it's on my phone, and on there you've got the buckets of money, so you literally just top it up like a virtual credit card. You just top it up. It comes actually with a really pretty card as well. I don't know about you, but I really like pretty credit cards. I'm a real girl when it comes to that. But and then you can divvy up your money on it, you can save money, and then every time you do a transaction on it, it notifies you. And that's really conscious spending, isn't it? Because every time you're spending, it goes ting, and it shows you what you've spent and where you've spent it. Because I think sometimes when you don't pay for things in cash and you're just contactless paying all the time, that's when that £17.10 emerges and you're like, no, I definitely didn't do that, and you actually did. So I think it's more about conscious spending and conscious finance management, because I know day to day exactly what I've spent. It tells me, and then it tells me what I spent it on: pets, fuel, groceries, gifts, and you can divide it up, so you know at the end of the month it'll give you those percentages on where your money went that month, and then you can actually take action on it. I like the fact that if I know that it looks like I've spent too much on I don't know, groceries this month, which I have, I'll look at it and go, right, we have to meal plan better, and I have to figure out ways of cutting that down, because that is like 80% of our outgoings at the moment is just food shopping. So Laura, what have you got anything else to add with those accounts?
Just that Starling, massive, same as Monzo, massive digital disruptor. It is so easy to sign up for an account. I think the older banks, just hopefully they'll catch up, but the way that you used to have to go into branches, and they're shutting all the branches, and it's really, really easy. I think my husband and I, you know, you do a selfie and you do your driver's license and the card arrives within days. So that's just ridiculous. It's so effective, so efficient. And yeah, I would say actually having too many bank accounts can affect your credit score. Actually having a load of different accounts open, possibly with different overdrafts in them, it can get a bit messy. You know, so the 7 pots of money in various accounts from the question is probably similar to how we use Spaces now in the newer apps, and you don't need lots of different accounts. You know, personally, I have a current account, I have a savings account, and I have a sinking funds account, and there's only the 3. And you know, other people have, you know, because you can divide up your money within one and have your goals or your different pots, it's a much more effective way, and it's easier to keep on top of, because I don't know about you, I couldn't check 7 bank accounts every day.
No, so definitely check it out. There's you know, Starling takes like a day, as you say, to set up. It's all online, so you don't have to speak to anyone, you don't have to go anywhere. It verifies you all online, it sends you out in the in post, and then you download the app, and then you can start managing your money there and then. So it's really, really, really good. We talked about sinking funds and savings, and I'm going to ask you, Laura, what you think the difference is between sinking and saving, and what is a good level of savings. Because I, for one, you know, we talk with friends and I'll say, right, yeah, I've got savings, and then I'm kind of looking at other people going, I wonder how much savings they've got.
I'll show you mine if you show me.
Because I've got, like, say 10 grand in the bank, or I've got 1 grand in the bank, or whatever, or I've got 50 grand in the bank, or 100 grand in the bank. And then you're kind of like, well, what have they got? Because their level, like what they deem as good savings, a good level, like I'm comfortable, I have savings, is very different maybe to mine. For me, I think we talked about this the other day, it's like 6 months worth of living expenses is a good level of savings for me, because then I know that for 6 months, if shit really hit the fan, then I'm going to be okay for 6 months. What do you think?
So sinking funds are your pots for your annual big expenses that are going to happen. So we touched on it earlier, but it's basically working out what you need for Christmas, what you need for holidays, what you need for car maintenance, MOTs, insurances, look, and it's shocking when you add it all up, you realise how much extra money you actually need that you probably don't put in your budget normally. Add those up, divide them by 12, and rough and ready, that's your monthly amount that you need to put aside. So they are not savings, they are not to be dipped into because you want to buy something or go somewhere. They've got a job to do, they're out of sight, out of mind. So that's sinking funds. Savings, again, it's incredibly a personal choice, but what do you need savings for? Well, it's your war chest to attack a crisis with, or to emergency savings firstly are only for crises. So I always say in the playbook, we talk about £1,000 put to one side for emergencies as a minimum while you are paying off debt if you're on a debt-free journey. Aside from that, getting to a point where you have 6 months worth of outgoings, like you said, Kat, when you have a relatively stable job or salary or self-employed business income, is a wonderful place to be. And it's kind of the optimum. Some people opt for 12 months savings in the banks, and I mean emergency savings, and they will not touch them. Others think that between 1 and 3 months outgoings. So what's interesting there is that number then depends on how high your outgoings are. So if your outgoings are quite high, that's a high figure to get to 6 months. If your outgoings are quite low and you don't need a lot to get through the month, then that figure's lower. And over and above that, really, once you've got a stable cash savings position, and obviously you're very lucky if you're at that point, anything else should be distributed to grow. So it should be in investments, it should be in prices, it should be, whatever your risk appetite, it should be doing more than just sitting there probably.
And you talk through people all that in your playbook as well, which is really good. So if people want to get more into that, they can find there. I'm furloughed and 80% of my salary right now. What would be a top tips to manage my finances? So I guess this is like little finance hacks right now, isn't it? I think the accounts is one thing about managing your finances, actually owning it and knowing your numbers, and then finding ways of how you can split your money up to make sure that your outgoings, your necessary outgoings, are covered out each month. What other sort of hacks at the moment are you girls thinking about in terms of preserving money for as long as possible? I know that I'm shopping at Aldi. I've always shopped at Aldi. And you know what? I don't know why people are so like, oh, I can't tell people that I shop at Aldi. It's bollocks. I shop at Aldi. The range is limited, but do you know what? The products 9 times out of 10 are better, or if not as good as anywhere else. I spy the neighbours when I see the Ocado van go past, and I think someone's doing well for themselves. Not me. I'm in Aldi. I take my IKEA bag for life. Yes, I do. I actually take 2 because of all the fruit and veg that I'm having to buy, and all the dog food. And then I zoom on around to my local Aldi, which is brand new, 2 IKEA bags that I can barely lift, and I crack on. And I'm not ashamed of it. And that's the sort of thing that I do. But I definitely use like Gumtree, eBay. I'm always on Facebook Marketplace. I tend to buy secondhand rather than brand new where possible, or if I can upcycle something. In fact, Kate, your sister, she had a ladder once upon a time. It is now suspended in my bathroom because I sanded that bad boy down and painted it this week, and it's now a feature in my brand new bathroom. But yeah, I'm definitely upcycling, reducing what I'm spending. I feel a lot less the need to buy clothes at the moment because we're not going anywhere anyway, and I'm finding my clothes. But in terms of shopping hacks, yeah, Aldi for me, and just really upcycle using the secondhand marketplaces. What about you two?
Or you go first.
Well, actually, I was just thinking, shall I share my screen and show how I would go about it?
Yeah. Let's see if it works.
You'll have to enable.
Oh, I don't know. I think it's already enabled at the beginning. What have you?
It says host disabled participant screen sharing. So maybe you thought we were going to share something sneaky. Well, you can have a little play around it. We can do it great. If not, what I've got is this initial budget table. If you email me at laura@financielle.co.uk, I will email you this. It's a 2-page thing. It is an appendix at the back of the playbook. And what it is, it's a real good. Oh, I'll try it now. Okay, let's have a look. We'll share screen too. Look at this technical. Can we see, ladies?
Yeah.
So what this is a really good exercise to do in a methodical and logical manner to put together a budget and to work through it and look at what your current costs are and what your possible new costs could be, okay? So you would start off with each bit. And what I also say in the playbook is there's now decisions and later decisions. And so a furlough for a short period of time, you may think, okay, we'll just do some more temporary decisions. If it's, no, this is going to be a long-term loss of income, you might in the back of your mind be thinking of bigger things. Like, for example, this is my current mortgage cost. And there's mortgage payment holidays and stuff, obviously, but there's also things like remortgaging, lengthening your term, as I guess some people may be coming to UK for. It might be remortgaging, getting the payment down, or if you've got a rental property, it may be that you decide to move down in rental cost, and so look for something more cost effective, or even you might rent a room out or something. But you go through each one, you fill out what your current cost is for that, and then you think about what things you could do to reduce it. And like I said, in the playbook, we go through every single one of these and go, this is what you can think about. Council tax, there's stuff on there about how if you're in hardship, actually you can apply for a break on your council tax. Some people are successful, some people aren't. Switching your gas and electric. Electric's probably going up if you're at home all the time, but gas at the moment, because of oil prices, is going down. So, don't forget these places penalise loyalty. If you stay with them, you don't get a deal. So look at the really good online switching stuff like you switch or compare the market, and it's about going through each one by one. Firstly, going, can I get it cheaper? You have to pay your rent and your bills. And it comes down to satellite and cable TV. You might decide, do I change subscription? Some suppliers are letting you renegotiate or remove stuff without penalty. So even if you're not getting rid of it, do you bring it down? And it's just a really good way. If you've got your current cost, your new cost, and if you can know what you're saving, what you'll be able to do is recognise that by switching, cutting, and like with groceries, like you said, taking advantage of your Aldi opportunity. We certainly do. Shopping, getting your fuel from a supermarket or Costco rather than the service station, which previously I just would not have had an issue with it before. And when I realised, looking at the prices, it's ridiculous. And that's what I would do. I would methodically go top to bottom. And like I said, if you email me, I'll give you one of these sheets and you can have a go. And it'd be great actually to be shared with us after this exercise what your saving was per month, times that by 12. And that's a pay rise that you've just given yourself. You and I have talked about this before, Kat. Every penny that you save is an after-tax pound that you've just given yourself. And so, if you wish you could have a pay rise at work at the moment, or if you've just lost 20%, you could fix that by cutting a couple of things, and there's your money back again. So that's what I do.
Yeah, no, I love that. And I think that the paying yourself thing, we love talking about that, because I know that I came back from the retreat in September, where me and Laura spent the weekend together, and Laura was talking about this financial stuff, and I was like, oh my God, yeah. So I came back and I'm guiltily still using somebody else's Netflix. Thanks, Charlotte, you're amazing. But there's a family of 4 on there, and I got one of the logins. So that's Netflix. We've got Spotify accounts that you can have like up to 6 family members sharing. What was it the other day? Even like this Zoom thing, right? So I've just paid for a $11.99 for the month, because you can only do a 45-minute chat otherwise with 3 people. So I thought, for $11.99, I'll just go for it. If anybody else wants to use this Zoom account, just let me know and we can share the Zoom account, because we're not all going to be on it at the same time, and therefore you're saving $11.99 if you need to do a recording like this with 3 or more people. That needs to be over 45 minutes. So I think there's definitely ways of hacking into those sorts of subscriptions that you can either cancel or share with friends and family. And then there's other ones that you can just like get rid of like altogether. So for instance, like I had a magazine subscription, and I just got rid of it because you know, I can read all this sort of stuff online anyway. I really don't need an actual magazine. And every now and again, they'll send me an offer, like 3 subscriptions for £3, and I'll get that because that's £3. But I'm not paying £5 a month anymore and things like that. I unsubscribed from retailers' newsletters that were tempting me into buying something or doing something. So, for instance, I don't know, Debenhams, they keep telling me there's a sodding sale every Monday. And I kept going onto their website and looking at their sodding Blue Cross sale that they seem to have every single Sunday or Monday or whatever week it was. And it was just constant. So I just stopped getting Debenhams emails because they were like just driving me mad and tempting me into going onto their sales. So that was just like a little thing that I remember from last September that I really took away and learned how to sort of hack away at. A few last questions. I'm thinking about pausing my pension contributions at the moment because I'm on a lower salary due to the 80%. What are your thoughts on that, Laura?
I mean, for me, I would say you have to have hammered that exercise first. So, you know, pension's a big one, and I'm going to be doing a lot more work on pensions to try and break it down, you know, what they are, what you should be doing. I'm certainly not an advisor, so I'm really looking forward to getting under the skin in a bit and trying to break it down. But, you know, what are your pension contributions now? Do you get a match if you're in an employment situation or not? And how much is that? Because I know some people spend more on their iPhone payment than they do on their pensions. I know people that do that. That is scary. You know, that iPhone's going to get dropped in the sink at some point on a night out, and your pension is something that grows. And so I would say there's a difference if you're in a complete crisis and there's a pause and you go, I'm stopping investing, I'm stopping doing everything for a period of time, and I know I have done absolutely everything I can, and you do that exercise that we just did first. If at that point the numbers still don't match, and you on that basis, I wouldn't be investing in my pension. But I would say there's a period of time before I go back in. That's what I would do. It's you know, every decision's personal, but I think people really need, you know, if you cut in your pension, you better not have a Sky subscription. I'm just telling it like it is.
Yeah, I went through the budget planner, and because of the like uncertain nature of my role at the moment, I really didn't know what was going to go on. So I did take a payment holiday on the mortgage because between Mark being self-employed and me, you know, potentially being out of work, and then my pension, I was putting in hundreds of pounds a month into it, and so I've cut that right down because for me it's something that I can definitely build up in the future. And I'm 33 years old, I've still got time. But right now I just wanted to cash in the bank that I could save, and I've cut everything else, I've stripped everything else out of our lifestyle as such during this time, and I'll put it back, I'll bounce back with it by the end of the year, I'm sure of it. But right now it's like, right, let's just preserve. And so I just literally just stopped everything, and just put cash in the bank whilst we're still earning some money, and that's
the point, Kat. So you're pausing it to build up the cash. So if people are, please do not take a mortgage payment holiday and go buy a handbag. Like, that's not what it's there for. It's either because you genuinely don't have the money, or if you're in a position of risk, which you know, obviously your household is a perfect example, but you're very sensible with money. Having that cash in your back pocket for if you need it, it will then later pay your mortgage. And I think that's the key thing here. I think there's a danger of cutting key things and going, no, everyone's buying stuff for the gardens, I'm going to buy a paddling pool for the kids. You know, it's about making sure that we're making conscious choices, and that's what's important here.
The next thing follows on from that, which Kate, you're probably a good one for. So obviously people are taking mortgage holidays, payment holidays, which has been introduced pretty much across the board now. I know that there's lots of other places that you can do payment holidays from, but in terms of mortgage payment holidays, have you got any thoughts on that?
Exactly what you two have just said. So the mortgage holiday should be taken if you genuinely are not going to have enough money in your bank account at the end of the month to pay your mortgage and pay your bills, and it would end up having an impact on your credit rating by not paying it, or your household is at risk and potentially you may go through some financial hardships off the back of coronavirus and lockdown, and therefore a cash reserve that you would save over that 3 months from the mortgage payment holiday would be a great benefit to you in potentially the next 6 to 12 months. You shouldn't be taking a mortgage payment holiday and then buying a hot tub. it's as simple as that. You know, if you're taking a mortgage payment holiday, there should be a really, really good and genuine reason for it. And you should be saving that money and putting it aside, and potentially using it to make your mortgage payments over the next 6 to 12 months, because I think people are forgetting that when that 3 months stops, the mortgage lenders are not going to continue giving payment holidays. They can't. It's not something that they can continue to do. So yeah, you just got to be sensible with it, and make sure you use that money for your future when you potentially, you know, are going to have less cash
and with
reserves.
the mortgage payment holidays, say for instance people take 3 months out now, and say for instance that person that's got their mortgage in December, does that 3 months add on to their mortgage term, so therefore their mortgage won't end in December? Or does the money, how do they recoup that interest in that money between now and December, say?
You need to check with your lender, because lenders can be very, very different about you know, how they add it onto your existing mortgage. But most of the lenders, they're increasing your monthly payments slightly. So when you come off your mortgage payment holiday, they've sort of spread it over the term of your mortgage, so your monthly payment would be impacted. So most people that have taken a mortgage payment holiday, they should have had in writing confirmation of what their new payment would be when they start paying it again after. But it isn't something that should be taken lightly, and that's what I've had a lot of calls and talked through a lot of people, their situations, and there are genuinely people out there that have got no other choice than to take the payment holiday.
Yeah.
And that's what it's there for, isn't it? There are some other people that have rang me and said, my lender's offering a payment holiday, should I take it? And when I've digged in a bit deeper, they're still working, their financial situation hasn't changed. So it's not just a holiday from paying your mortgage, you know, so that you can, you know, book a holiday next year. That's not what it should be used for, and it should be left for people that genuinely could end up suffering or are struggling to make ends meet at the moment. Also, it's really, really important that people ask questions. So most mortgage lenders recommend that it won't have a negative impact on their credit rating, but with mortgage with payment holidays on other debts, you need to make sure that you check with your provider if it's going to impact your credit rating. Are they going to mark it as three missed payments? Because I know that a lot of people that I speak to, they really work on their credit ratings for years and years. In fact, they become obsessed with it, and they want that they see it as something really important, that they've got a really, really good credit rating. So you do just need to make sure you check with your provider if it is going to impact your credit rating before you agree to take the payment holiday.
Yeah, and just on that with the sorry, I've got really tickly throat. The payment holidays that you can get on other outgoing, so like car finance. Sorry, I've really got a tickly throat. What do you think about that, Laura?
I think it was needed. I think that some people's car payments out of their family are bigger than the mortgage, and you know, you can live in your house and you can't live in a car, and you've got this frustrating car sat there that you're not allowed to drive to your work because your work's stopped, and you could be facing a situation where you can't make that payment. So I kind of did a blog on it before the official announcement, saying that there's absolutely hardship departments at car finance companies and other finance companies that are here to help. They are regulated by the FCA. They have to help people struggling. So please always reach out. Never just stop paying. You have to get formal consent and make sure, because that really can affect you negatively. But again, it's the same point. You know, it doesn't defer. It doesn't remove the need to pay eventually. It'll come back in other ways. So, like I said, whether it's a raised payment, or it could impact your credit score if it's a non-mortgage debt. So, ring the companies, see what you can do. But if you can pay them. And what I would say is, if you're having to ring around a lot of companies to ask for payment holidays other than your mortgage, wouldn't it be nice not to have those payments in the first place? You know, for me, that would be a real trigger to say, actually, I need to get this debt out of my life, because if a payment holiday for these different credit facilities is so desperate and important, and I think about the feeling like if you had like four pieces of credit on top of your mortgage that you got holidays for, and you have that 1 month where you don't have those payments, that's what it can be like, and you can get rid of that debt. that would really spur me on to go, do you know what, never again. And I'm going to get rid of them, and I'm going to give myself a payment holiday. I'm not going to have to ring and beg a department to look after me that way. I'm going to take control, and I'm going to it's not a holiday, I'm going to get rid of it forever. That's certainly, you know, another quite strong, but my views on it.
Yeah, there's a couple of things that you just said there that's reminded me of things. I spoke to somebody the other day, and they just said, I just haven't got around to ringing everyone yet because I just can't face it, and I'm burying my head in the sand because I need to ring the bank, the car finance, DFS, because their buy now pay never so for deal is always on. My store credit card, because Debenhams keep bashing on at me about 70% off Blue Cross sales, so I took out store card, blah blah. You know, and so you find yourself, well, people have found themselves like burying their heads in the sand and they can't actually face making these calls. My advice, and it's only my advice, is just tackle one a day, or 2 a week, or 3 a week, and just break it down. Do know your numbers exercise. Face up to the problem, face up to your finances and know your numbers, go through the playbook, invest. And that's what I will say is, by investing in this playbook, you will not only make that money back one day, whether it be through investment or savings or just knowing your numbers and cutting something out that you don't need anymore, you will make it back. But it is about investing in yourself and your knowledge, so you actually adapt and adopt better habits and future learnings, because this is about financial education for your future and your kids and everybody else, about how to manage money and handle money, so that you never face this again. And we all live in financial freedom. We feel very secure about ourselves and about our finances. So couldn't recommend it enough. A couple of last ones. Business bounce back loans. Is it a good idea to apply? Maybe not needed right now, but maybe for the future, as a way of paying off other debts which have a higher APR and Consolidate. And Mark asked me this the other day. He said, somebody's asked me about this business bounce back loan, wherever. And I said, is it a loan or is it a grant? Because they're two different things. Grants you don't pay back, and loans you do. So then I was like, well, how much are they giving you? Or could they give you? He said £10,000 at a 2.5% interest. So whatever, you know, what's that, 250 quid, if I've worked that out right. So it's like, we pay 250 quid back on the 10 grand. I'm like, yeah, but you still have to pay the 10 grand back. Like, it's not like they give you 10 grand, you're just paying the 250. And I was like, do we need it? Like, are you not going to get your self-employment grant thing? And he's like, well, I don't know yet. And I said, okay, so do we need this or not? And he's like, well, no, not at the moment, but it could just be nice to have in the bank. And then, you know, and I'm like, no, because we'd have to pay 250 quid to have it just sat in the bank. So what's your views on this, ladies, in terms of just getting it to consolidate other debt at a higher APR and then paying it back? So I think it is a 2.5% rate.
Yes, well, I actually, the bounce back loan, you actually pay nothing back on it for 12 months. So for the first year, you don't pay anything at all.
Does that mean you could pay it back at zero?
Yeah, so literally in the 12th month, if you haven't used it, you could pay it back. I think there is a small setup charge for it. I can't remember the exact, so there's just a very, very small charge that they add on to the loan for the setting up of it. But I mean, yeah, absolutely. You know, some quite savvy business owners and self-employed people will take advantage of the fact that it's very, very hard to borrow for business purposes at 2.5%. So it could work out well for people, but also you could just have it as a cushion because of the uncertainty and not knowing what's going to happen over the next 12 months. So if you have got the opportunity, which you have, to pay it back within that 12-month period without paying any interest or paying anything back to it at all, it could be good just to have there as a cushion. And great if you don't have to use it, then you just pay it back in the 12th month. But it's also important to know that it's actually available up until November, so you haven't got to rush to get it, because they're letting people apply for it up to November this year. So, you know, Mark could see how things pan out over the next few months, and if in October we are in a worse position and he hasn't got as much business in the pipeline, then he could apply for it then, and he's got it until October next year. So the bounce back loan, I actually am quite a big fan of it. Again, if it's needed. If it's not needed, don't go and spend it on a hot tub or a new car or booking a holiday for next year, because that's not what it's there for. It's for people to use so that people still come out of it with businesses and being able to work. So yeah, if you think you could need it, or you think the cushion of it would be useful, then it's worth considering. And if you don't use it, just pay it back before the interest starts on it. That's my thoughts.
No, I like that. I didn't realise
that. That is really important, actually. That I think people are seeing it as free money, and it's not free money. It's cheap money, and it's a little different. It must be really hard if you're a self-employed individual, because your business and your personal finances like really overlap.
Yeah.
I really picked up, Kate, at the beginning when you said that point about splitting it up into 3, your business income and having a pot of savings, because really I think that's what this would be then used for, and it's just such good advice. If you can build up a savings pot, you never need to rely on a business loan, because that's your mini bounce back loan. And for anything like this, I would say please try not to use it to consolidate debt. That's not what it's there for. It's a cash injection into a business to keep it going. You have to be all over your figures, so you should know what you need and what would help, not just, they'll give you up to a certain level. It should be a very, very conscious decision. You should have modelled it and understood what it could be used for, why you would need it. Again, just as Kate said, if you don't need it right now, it's nice to have. Well, we'd all like a bit more in, but it's not yours. It's money that you have to pay back. So
that's my worry, that some people will take it and it will be spent for the wrong reasons, and ultimately it's just going to put people in more debt in the long term. So it's a big decision to make, and it's not just something. Unfortunately, a lot of the grants and the help that have been put out there, I don't think everyone's using it for the right reason, and it's very readily available. So someone can apply for the bounce back loan, and I've applied for the bounce back loan, so I can tell you how easy it is. And the reason that I've made the decision to have the bounce back loan is as a cushion for the business over the next 12 months, and it has gone into a separate savings account which won't be touched on a monthly basis, and it will only be used if I'm in a position where I've got to use it, to pay bills, to pay staff, or maybe to reinvest to grow the business any further. And that's the exact reason that the bounce back loan should be used. But it is literally, you apply for it with your bank. It was put into my bank account the following day. A list of 10 questions were asked. It was the easiest loan application I've ever.
It's a bit scary, isn't it?
It is really scary, and I do think a lot of people will use it for the wrong reasons. So please don't use it for the wrong reasons. Use it if it's going to be the difference in you having a business in 12 months' time or not, because that's what they want to do. They want to save businesses. They don't want people to increase their debt and book loads of holidays for next year and buy hot tubs and whatever people might do with it.
Applied for it through your bank, was it through a business bank account, or could anybody, say if somebody was looking to, if they were self-employed or they were looking to set up, so if you're self-employed you might have you just use your own bank account maybe, or if you're looking to set up a new business, because we might have people watching this who are using this time creatively now to go, do you know what, I'm going to set up on my own and I just need a quick cash injection to get me up and running in the first 6 months, to get me going. Would they give it to somebody like that?
No, so you have to be self-employed already, or a business owner, and I would assume, I'm a limited company, so if you've got a limited company, you would specifically have a business bank account, and I'm pretty sure it's linked to having some form of business bank account. I just did it through my online banking, through my business bank account, and like I said, it was in my bank within 24 hours, and I literally, as soon as it was there, moved it over to a separate savings account. And that's what I think is really important. People move it, they're not tempted by it. But it wouldn't be available to someone just to start up, that isn't already. The whole point of it is to help struggling businesses out, or for them to be able to reinvest, to grow their businesses, to find other sources of revenue, to get them through what is potentially going to be a very difficult period for business owners and their employees. So use it again, but use it wisely.
And use it, don't abuse it.
Exactly. Like that.
Our own saying. Cool. Well, I think that's pretty much most of the questions. I think we've gone through. I think that we've talked about, obviously there's you know, knowing your numbers, check your bank statements. What are your triggers? What's really worrying you? When you think about something or you hear it, something, don't ignore it, face up to it, go and figure it out, and then make a plan to solve it. We're talking about savings, debt, credit, store cards, retailers, furlough, self-employed, emergency funds, sinking funds, financial security, online banks, family and personal finances, joint bank accounts, business finances, payment holidays, direct debits, car finance, creating budgets. We talked about so much today, which has been really, really good. I'm just going to quickly show everyone the details for you ladies, so that if anybody wants to get in touch. So Kate, can you see that screen with Kate there? Yeah, so that's Kate. What's life after lockdown looking like for you, Kate? What are you looking forward to doing?
Oh, I think like everyone, it's just all about family and friends for me, and getting my little boy out, seeing his friends and his cousins again, just getting back to some normality. I think the first, I don't know if you girls are the same, but the first few weeks it was a little bit exciting, and I set up all my staff at home, and I was like, right, you know, we're really gonna smash this, and we're gonna be absolutely fine. And then we all felt the same. After sort of week 2 or week 3, we started to take a little dip in how we felt, and a bit of demotivation. Felt like we couldn't escape. And I think in the last couple of weeks we've gone back up again. You know, with them giving us good news about the lockdown being eased a little bit, and some sort of timeline of when things are going to change. You know that you've got something to work towards then. So I just think emotions are up and down at the moment. But as long if we've got our health, we've got our family, and none of their health has been impacted, then I think we should all count ourselves very wealthy at the moment. That's the most important thing. So yeah, just getting out and seeing people again for me, seeing clients again, because most of my business is face to face. About 60 to 70% of it I see customers face to face. We've changed how we work, so everything I'm doing is video and telephone at the moment, which is great. We will continue to do that and build on that. I'm sure there's more business out there in it for us. But I do like seeing people, so I'm really looking forward to getting back into the office and seeing people again.
Yeah, you're a social character, aren't you? So that's your details for anybody that is looking for mortgage advice or anything like that. And you're also working on a really exciting project at the moment about insurance for women, aren't you? So that's going to be exciting. It's keeping you busy as well.
Yeah. So that's like you said, a lot of big people having more time to be creative. And over the last 8 weeks, I've got more marketing stuff finalised and sort of ticked off a list than I have done in the previous probably 6 months, because it always gets put to the bottom of the pile because I'm so hectic advising and dealing with customers. So we've got loads of new marketing material, a new website being built for Ready to Mortgage Advice, and then on a separate note, a new business that we're working on, which is purely to do with protection and helping women that you know, maybe feel that they would prefer to deal with another lady, building a protection portfolio, talking about life insurance, income protection, critical illness insurance, maybe tackling some little embarrassing or awkward subjects that they wouldn't want to speak to a man about necessarily. So we'll be working on that over the next few months as well.
Awesome. I'm really excited to see where that goes, and hopefully we can support you on that as well. I'm sure between mine and Laura's community we can
Definitely. Thanks guys.
Get that off the ground. And then Laura, your details are there. So I know that you're going to, if people email you there, laura@financielle.co.uk, you're going to send out the budget planner tracker to them. And people can obviously check you out on Instagram and your blog on your website, and check out the playbook there and buy it there with the 15% discount code that you've kindly given to us today, Pro Retreat 15. What does the life after lockdown look like for you?
Same. I mean, I'm such a family girl, and I'm very lucky that I live close to family, and so we physically see them through windows and garden fences. But you know, getting back to playing with my nephews and getting close again, I'm looking forward to doing that, and probably being able to see close friends that don't physically live close. And so Yeah, Zoom is an excellent stand-in, but it's not as good as the real thing as catching up over a bottle of wine and sharing stuff. But what I have found is I have embraced being at home. I've learned to work from home, which I've not been very good at previously. And I've actually been able to spend much more time with the children. And I think life after lockdown, work-wise, whatever work means for me after the crisis, it certainly will involve probably more time being at home because you can do it. I have enjoyed as well breaking up the week. You'll see me only really work on Financielle at a weekend, and so I'm enjoying. I've got like my couple of hours writing time on a Sunday morning where I write blog posts or I write Instagram. It was that's how I finished the Financielle playbook. And so I found compartmentalizing my time. I can see that carrying on maybe to life after lockdown. How about you?
God, who knows? Obviously, I've got 2 new dogs in my life that have been with us now for 8 weeks. So before lockdown, we didn't have the dogs. So I've got to come out. I'm emerging with 2 children and a new bathroom. So, me and Mark got on that quick. Yeah, so life is going to be different for us anyway because we've got the dogs and we're going to have a whole new lifestyle. So it's going to really be exploring the new lifestyle that we now have, because I wrote an article the other day for a magazine about the F word, furlough. And it's called The F Word, a career break that you didn't know you need or wanted, but maybe you did. And it's so relevant because I worked a million miles an hour since I was 13. I used to work at a chip shop back in Redditch at 13, illegally, and I've always worked ever since. And now I'm being told that I can't work and I'm sat at home, and it's very unusual. So for me, I've learned a lot about myself, and I think I've mourned my previous life in terms of my first chapter of my life, my first 33 years. I think I've mourned that now and let that go, because life is never going to be the same, and my social life is never going to be the same. My network, my job, what I left isn't going to be the same going out of this. So I'm coming out, like Kate said, I went a bit of that and I'm now on that. So who knows, but I feel very excited about it all, to be honest. And working on the professional retreat has been massively has helped me massively, and doing these workshops for everybody on a Sunday morning is what's kept me going during the week, because it gives me something to focus on, and it's great topics like the ones we've done today. And I hope that everyone at home, you've taken a lot from this today, that you have been able to maybe think about, when we've talked about our goals before, and when we've talked about our visions, how we're actually going to finance those visions, how we're going to finance those goals, but also how can we take control. And it's all about having control right now, controlling your controllables, and your finances are what you can control. So I hope today's been really useful for you. Email Laura, she'll send you that budget tracker, and download the Financielle playbook and get started, because the investment that you make in that, you will make back so quickly. Thank you so much for joining us today. Comment below. We'll try and answer some questions from during the day, and next weekend we're going to be doing another workshop. It's going to be about personal brand and recruitment. So that is going to be all about how to your personal brand on social media platforms anyway. So just how you're portraying yourself during this time, and how you're coming across, everything to do with your CV, your job. What's your job security like at the moment, looking at your CV, looking at your LinkedIn profile, looking at your network. How can you harness your network and your community around you and leverage that? We're going to have a recruitment expert on the call with us, and she's going to be talking about her recruitment course that she's putting together. So she does coaching calls, and she helps people basically find their next job, but she takes you through the whole process. So from personal branding, social media, CV writing, right through the recruitment process. So she's going to be fantastic. So we're going to be talking about that next weekend. So thanks so much for joining us. Thank you, ladies. You've been amazing. And have a really, really good day. Take care. Bye.
Thank you, everyone. Bye.